talk about Capital One. Now, Capital One has been slashing a lot of credit limits for a lot of my clients. A lot of them been calling me, complaining like, Rickita, my credit's been dropping. And I'm like, okay, listen, we know it's dropping. Now we have to figure out what we got to do to pick it up. Or if you're not with Capital One, you with another company and your credit score is dropped, this is what I want you guys to do. So let me make my screen a little low. Let me make my face a little smaller. I want you guys to get the two $5,000 credit cards. Now, it's two $5,000 credit cards that almost anybody can get approved for. It'll be $10,000 added to your credit reports. Getting this $10,000 added to your credit reports can help with your utilization. Now, a lot of times, company dropped your credit score because maybe your credit score dropped, or maybe you haven't been active on a credit card. So now you got to get your credit limits back up there to the point where you have higher limit credit cards now, so that your credit score don't drop even more. Now think about it like this. Say if you was to have a $5,000 credit card. Let me actually put a calculator up here, you guys. So say if you guys was to have a $5,000 credit card, right? And they dropped your limit to $2,000. But the thing is, you spent 15% of your credit card. So you spent $1,500 on your credit card divided by 5,000. That means you spent 30%. So if you guys don't know, for any decimal, just move it over 2 times. That's going to be a percentage. So 30% of your credit cards you use. Now that's the safe zone. If you look on Credit Karma, that's like we're not going to hurt you, but it's not going to help you, right? I always tell my clients to stay here in the green. So right now, this client is actually in the green, but I want you guys to stay here in the green also. So when I say go here in the green, when at first you was already at 30%, you was pushing it, right? So now they dropped your credit limit down to $2,000. So let's see what that looks like. So you have 1,500 divided by 2,000, right? Enter. So now you spent 75%. You're here now. That's happening to a lot of clients. That's why I tell my clients, just get the two $5,000 credit cards. It's going to be $10,000 added to your credit reports. They don't care if you had a bankruptcy, repossession, or anything. They do not care. The thing is, they charge you $100 to even to get the account in the first place. That's why they don't care. They like, okay, I'm charging you $100 off the bat. I don't care. I'm going to give it to everybody. And a lot of people was getting these accounts too, just to build up their credit reports. I still tell my clients, how much can you afford? Because I really want you to get those two $5,000 credit cards. Because when I personally added to my credit reports, just one of them, my credit score is 60 points. So I definitely always tell my clients to get it. But now everybody got to kind of get it, because think about it like this. Your utilization is 75% now. Now, say if you were to have $12,000 now, because you got $2,000 already. So if you were to actually be here, where you spent $1,500 divided by 12,000, because now you got those two $10,000 credit cards. Now you're looking at having a 12.5% interest rate. Well, not interest rate, a 12.5% utilization, which will put you right here. You'll still be in the safe zone. Now, I always tell my clients, you want to be in that 5% zone, but this will put you right here, because if you get all the way up here, your credit score is going to drop so low, you guys, seriously. And if you guys never maxed out a credit card, then trust me, maxing out a credit card, even if they dropped your limit, now it looks like you're maxed out the credit card. And they're not going to drop it just a little. They drop it a lot to the point where you're just right there. So now you're going to most likely be at that 75% mark. And they can legally do it technically. So what I want you guys to do, I just want you guys to have that backup plan. And I want you guys to apply for two $5,000 credit cards. So let me actually show you what these two $5,000 credit cards look like, because this client actually has the two $5,000 credit cards on their credit reports. So these are the two $5,000 credit cards this client got. And I told them to get it because you see how these are maxed out? Look at these two credit cards. They're both maxed out. So this one right here is at 103%. The utilization, that's how much they use. And this one is at 98%. But since they got these two $5,000 credit cards with the 1% and the 0%, look up here now. Now, look at their utilization, 15%. Compared to if they didn't have it, you guys, they'll be over that 75%. Like, do you guys see what I'm saying? And now their credit score is not going to be hurt, because now they got these two $5,000 credit cards helping them. And now that they got these two $5,000 credit cards, I just want them to pay these down, especially like this. This is bad. When you over the limit on it, that's even worse, because now they're going to charge you extra. So you definitely want to get that down. But think about it like this, you guys. When you get those two $5,000 credit cards, you don't even have to think about where if it's going to really help you, because especially if you have balances low like this, it's going to really help you. And I really wanted to help you enough that you would just stay in this zone right here. I really want you in this zone, but if you can stay out of this red zone, that's when it's going to really drop your credit score. Nobody's going to want to give you a credit card. You can't even pick yourself up at that point unless you pay it off. Then you'll be good, you guys. And remember, too, look down the description, get my master credit card list, and you'll be able to get those two $5,000 credit cards, which is going to really help you. So if you can see here, this client, they have the $1,700. They're past that. They maxed that out. That's over with, right? That means that technically they were over here in that 75%. They was past that 75%, which is the red. It really dropped their credit scores a lot. But when they came to me, I said, oh, no problem. Don't worry about that. Just get the two $5,000 credit cards and you'll be good. So they got the two $5,000 credit cards. And instead of them reporting that the utilization is at, at 103%, now they're reporting that it's at 15%, because what they did was they added up all of the balances. And then on top of them adding up all of the balances too, they actually added up the limits too. So what they did was they divided how much you owe in total and then divided by how much you have available. So let's go ahead and do that ourselves. Let me show you what they did basically. So whatever your balances is, go to Credit Karma and look at all these balances down here, add all of these up. So this number, add all the first numbers up that you'll see right here. So let's go ahead and do that. And let me teach you guys how to do utilization and how to actually make sure that your utilization is good. So let's go ahead, let's move my face over here, and let's go ahead and bring this calculator up. So let's see here. So 722 plus 983 plus 59, and the other one is in use, so that's 1764. And if you can see here, that's what this number is, 1764. But then they got to divide that by, let's just remember what that number is, because I want you guys to divide that by the amount that you have available, or you will have available. So you guys can test it. Add up all of the limits that you have right now, plus add the $10,000 on, because you know you're going to get it, right? So go ahead and do 700 plus 1,000 plus the 10,000 equals, that means you're going to have that amount that's here, you guys. That's the 11,700. I don't know what I am doing with numbers today, like what is going on with my numbers today. But now you guys can figure out how much your utilization is going to be. And I want you guys to figure this out, because I want you to be able to know like what you're going to have. So let's go ahead and do 1764 divided by 11,700, and that's how they got that 15%. Remember, move the decimal over 2 times, and you'll have that percentage, which is 15%, that's what the 15% is. Now, say if the client was like, "Oh, Rickita, I got $500 extra. I want to actually go ahead and pay off one of my credit cards. Let me show you how much the utilization can go down just by paying $500. So let's act like this is $2,200." Oh my gosh, you guys, what is going on with me? $222 plus 983 plus 59 equals. So now it looks like they only spent $1,200, a little over $1,200, divided by that 11,700 they have, 11,700 equals. Now the utilization will be at 11%. You see how much that would drop it? So keep that in mind too, that when you start paying off these bills, the utilization gonna get better and better and better and better and better. If they would have paid $600, they would have been in the better place too, right here. But remember, this is a better spot. When you get the 30% or higher, you get the 30% or higher, it's really hurting you. But if you get to that 75%, like Capital One is making everybody do right now by dropping the limits, then you're really going to be in the tough spot. And I really don't want you in that tough spot. I want you guys to make sure you guys are good during these times. But don't forget, Capital One is dropping limits because maybe your credit score dropped and they've seen that. They're able to pull your credit report. They did a soft pull. They pulled your credit reports and they dropped your limits because they seen that your credit score may have dropped. Maybe you maxed out other credit cards and your utilization messed up. Or if you want to to avoid this too. You want to avoid this. You know, you max out the credit cards. You don't want capital to find out, or you don't want other banks to find out. Get those $2,000, $5,000 credit cards because it's going to really help boost your credit score up and help with that utilization. That way it's lower. When they go and check, it's low. They're not too worried about it because now it's low at this point. And let me know if you guys have any questions. And after you guys pull and pick up your utilization by getting $2,000, $5,000 credit cards, I want you to look into the master credit card list. Is basically what you're going to get the $2,000, $5,000 credit cards. Look there and look at the other credit cards that have higher limits that I put on there. It's easy, high limit credit cards that you guys can get. Now, when I got these credit cards too, my credit score was about like a 620, but I was able to get $34,000 in credit cards. It was like 3 credit cards. I was able to get, I think it was like 11,000. I don't think it was like 11,000. No, wait, no, it was more than that thing. It was 11,000. I had 13,000, and then I had like a $10,000 credit. No, that's 34,000. Yep. I had the 10, the 11, and then I had the $13,000 credit cards. Now with these credit cards too, when I had these credit cards, it helped cushion me the same way I teach you guys how to cushion yourself now. So after you cushion yourself in terms of you protecting yourself with utilization, when you max out your credit cards, you won't be affected so much. I want you guys to get those credit cards next. Now, the thing is, they're going to want to pull your Equifax credit reports, so make sure your Equifax credit reports is clean. They don't want to see a bankruptcy or anything. But don't forget, if you have any negative accounts, definitely contact me because that's what we do. We help clients remove negative accounts from the credit reports so that they're able to get these different credit cards. So go ahead and look on the master credit card list. You already have it most likely when you get the $5,000 credit cards, and get those credit cards too. That way you can have a bigger cushion, because if you can have $40,000 or $50,000 in cushion, you won't have to worry about, oh my gosh, they're going to drop my limits, because your utilization is going to always be perfect unless you're doing like major flips or using your money to do like business or something like that, and you're maxing out probably $40,000, $50,000 in credit cards. I don't know if you're doing that, but I've seen some people actually max that much out. I don't think I even maxed that much out. Maybe probably 15,000 in terms of doing like rehabs and rentals and stuff like that. But if you guys max out a lot of your credit cards, or say if you have like a low balance on your credit cards, definitely try this. And don't forget too, don't get scared of them inquiries, because I have my inquiry removal letter. Go ahead and look down in the description. I have that for you guys. Do not be scared in terms of, oh my gosh, I'm gonna get an inquiry for this when I apply for these different accounts. You got the inquiry removal letter. You know what you got to do with those inquiries. And my inquiries was moved in 4 hours, so hopefully yours will be removed quickly too, you guys. So go ahead, look down the description, get the inquiry removal, get the master credit card list, and go to work. I'll talk to you guys later.